Good morning, everybody. We are going to get started here in just a few minutes, just a couple minutes actually. So just hang tight, and then we'll get started here on this Monday morning. All right. If you are here for the first time, welcome. We started this live morning broadcast, I think 2 weeks ago, and gotten a lot of good feedback. The point of what we're doing is to give you sort of what we think is sort of the top idea for, or one of our top ideas for the day. We'll keep it very brief. We typically try to keep it to about 15 minutes, which I think is quite different from other morning shows that we see where people just ramble on for, an hour, and it just gets a little bit too much. So that is what we are doing here, and we'll get started in just about 1 minute. All right. And you guys can hear me okay? Just making sure. I think we should be okay. Okay, perfect. Let's get started. We are getting into a rhythm here with our morning show. We are no longer blasting our entire list with attendees. So I think with emails to attend, I think a lot of people have noted that these morning shows are taking place. So thank you all for tuning in here, and happy Monday. Hope you guys all had a great weekend. Again, as I just mentioned before, if you're here for the first time, this is our brand new morning show here on YouTube. And it's live. It's 15 minutes. The point is to kind of go through our one of our top observations, whether that's an idea or something to stay away from, or just something else that's important. And so that's what we're doing, 10, 15 minutes, short and to the point. Well, we obviously had last week, we had a pretty good initial reaction to the Fed. In other words, a very bullish reaction to the Fed. I think a lot of that really had to do with the way that algorithms are programmed. They basically see lower equity price, lower bond yields equals higher equity prices, and then of course we had the options expiration day on Friday, which was the largest one ever. And so what I'd like to do today, again, here's for our morning show, is to look at one idea that has gotten quite a bit of news over the past few days at this point. It started, I believe, even Thursday last week, if I'm not totally mistaken, and that's Intel. Now, Intel clearly, and for those of you guys that are using our trend following software, the Market Rover, you'll know that Intel has been and continues to be in a very decisively bearish trend. That's this red background color. So since it became a bearish trend at $30, it went as low as 18 and change. That's a 38% drop. So the Market Rover's done its job. What we're seeing now, though, is a little bit of a change of tone, and Intel is vulnerable here for potentially seeing more upside. And when I say vulnerable, meaning like that would be a good thing, right? Now, to kind of juxtapose Intel versus the semiconductor sector or group, it's not a sector, it's a group. I'm just going to add the SMH in here so you guys can see this. You can see that it's obviously done a lot worse particularly over the past year or so, as we've had this whole AI thing. In fact, let me share with you this a little bit better so you can see just how acute this underperformance has been. I'm going to show it to you like this. We'll do this and we'll add, let me add this properly. SMH. And then we will add, okay, something's not right here, so let me do this again. All right, let's add SMH, and then we'll add Intel so you guys can kind of see what this performance drag has looked like. So you can see over the past, or just year to date, SMH up 36%, Intel down 55%, and you take that over the past year, it's not exactly any better. So, or not a whole lot better. So what we're seeing here is the potential for Intel, all else being equal, and there are fundamental issues with this company, the potential for the stock to catch up. Now, this is a very newsy stock, so we want to be very mindful of that. But there is an opportunity here. I'm going to call this more of like sort of a moonshot or kind of slingshot type of opportunity. This is not the kind of thing that I would want to put a lot of money behind because of the setup here. So that's kind of the main message here. But let's go into this a bit more so we can see if there might be something to do here. Newmont Mining, by the way, looks very exciting to us as well on the upside. But this is just, before we even go into the news, just for those people that like to see the chart, because that's typically what people want to do. And you can kind of see that again, the stock remains in a bearish trend, mind you, but there's now a lot of news that could move the stock. So what I see here is an opportunity for, if this news were to kind of gain more traction, I could see a situation where this stock starts to fill that down gap that it had on the 1st of August, which was basically right after earnings. Now that's a 25% move, and again, I'm gonna file this under risky. There's always risk involved in the market, so it's kind of silly to say this is risky because there's always risk, but this is a little bit above average because there's a lot of news flow. So what's going on with this company? So what's going on with this company, I'm going to take all this stuff over here. There's a lot of stuff here that we track, but just to give you a little bit of an idea, essentially there's two things. There's Apollo, which is a company that's looking to potentially invest. I think it said, what was the number? I can't remember. It was a lot of money to invest in the company. And then there's Qualcomm that was apparently in talks or is in talks, and they're checking this out also from an antitrust perspective. Basically take over Intel. That's kind of at least the rumors we've had so far. Now, a lot of ifs, a lot of questions, very little certainties, if any. But what I do see is and I think this is the silver lining, I see that there's now interest in the company. Whether it's an outside investor or let's call it an investor or even an activist that's going to put pressure on this company to change some things, or it's an outright purchase, take over, take out, whatever, friendly by Qualcomm. Either way, there's no activity in the stock. And so to me, when I see that kind of stuff happen, I sit up and take notice, particularly given the fact that it's been a big laggard. Now, of course, the question becomes, and I'm sure this is what everyone's thinking, what might now be a way to play this. And the way that I see this playing out is, again, it's very speculative because we're now entering, although we're entering a new period for the company where there's now potential upside catalysts at a more frequent rate than we've had for some time, and largely because of the outside forces, not internal. So to me, this is something where I would want to look at this from a directional perspective. I was actually doing quite a bit of work on the options last Friday already, and the problem in a situation like this, typically what I would do is I would do an options bull put spread. If you guys are not familiar with that, raise your hand and I'll be happy to walk you through this. But essentially, what tends to happen with a situation like this is there's a lot of volatility and choppiness. And so I want to be able to put on trades where I can be wrong and I could still make money. So in a situation like this, I would typically go out and I would sell like a put down here, and initially at least just to get in and sell another put against it, or buy another put against it for protection. So doing an options credit spread. And so a lot of you guys have probably seen us talk about those kind of trades before, and may or may not be doing them. The trouble with Intel that I have is that it's in absolute terms too low a stock price for me to do these kind of options credit spreads. That's not necessarily a bad thing, but that the stock is low, but it makes it, again, very challenging for me to do an options credit spread. So what it leads me to is looking at what can I do in terms of just buying options. And so what I was looking at over last Friday, and I looked at it again this morning, is how expensive are these options? And when I look at Intel, I see that the average sort of implied volatility right now is basically at a 52-week high. Like, these options are now currently at an implied volatility of like 65 or so, depending on which exact month we look at, which is at the very, very top end of the range. Last time we saw this on a 12-month look back was essentially last October at the lows, when the implied volatility was this high or this expensive. And so to me, it makes it a very silly bet to go in here now and buy options or buy a call. I need, if I'm going to buy a call, I need to sell another call against it. And so given all the uncertainty, and again, this would be, I'm going to label this under slingshot, kind of low probability, but one that if it moves, it could really move. What I typically try to do in a situation like this is go a little bit out of the money. What that means in terms of options is I would go ahead and maybe buy a call, somewhere, up here, and we can look at some numbers more specifically, and sell one a bit higher. So something like again, I'm just looking at this, like a 22, 25, or something like that bull call spread. And I'm going to look at the options table again here right now to see what I can find. Yeah, 22, 25. Let's see here. Where is this thing trading pre-market? Let's have a look at that too. Trading at 22. Yeah, 22 would be at the money at this point. Again, this needs time to settle as the market opens, but something like that, maybe even a 25, 30 might even be juicier. Yeah, even like a 25-30 bull call spread would probably not be out of the question. The target I'm looking at, as I said before, in a situation like this, would be for the stock to go back and kind of fill this gap that it had back in the down gap it had August 1st. So, again, the stock right now pre-market, as we're looking at this, is trading around $22. So I would probably want to go a little bit out of the money from that still, like a 25-30, like I said, would be something that I think could be quite interesting. So that's one idea that we're looking at here, and just thought I would put this on your radar with sort of this, with our new morning show. If you guys have any questions, I'm happy to entertain them here right now. I'll stick around for another couple minutes. But again, Intel, I repeat this. Obviously, nothing we talk about here is a advice or recommendation by any stretch. It's purely educational. So, I think this is a slingshot or a moonshot, however you want to look at it. A 25-30 call, 25-30 bull call spread. So buying the 25, selling the 30. Why a spread? Because the options implied volatility is very high. And I can't sell a bull put spread the way I like to do it because the stock price is too low. In this case, also, I would be using December options. I typically don't like to use options expiring much inside of 50 days. And the November options are expiring in 53 days. So the December ones are currently like 88 days. So that's kind of a bit more in the sweet spot. So that's intel here for an idea to start off the week. If you guys have any questions, again, by all means, please type them in. I'm happy to stick around and entertain. And if you enjoy what we're doing here, I know there's not on a Monday morning here typically get a lower, less people showing up, but give us a thumbs up on the video. That always helps to make sure that more people attend going forward. But again, one idea and 15 minutes is what the point of our morning show is. If you have any questions, let us know. Otherwise, we'll be back here on Wednesday. I'm traveling all day tomorrow, but then we'll be back Wednesday, Thursday for the rest of the week. Thanks for joining and have a great start to the week.